For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Morning. Shares in Asia Pacific, as you'd expect, waiting for the inflation figures from the United States, which comes out round about our time and your time, lunchtime. It's a key metric for the Federal Reserve to decide what exactly they're going to do, raise interest rates, all that stuff, which we go on about every day. And also the US midterms, the results are still rolling in, and all is still in the balance as the latest figures. Hong Kong down about 2%, Hang Seng Tech down nearly 3%, China down about 1%, Shanghai Composite down about 0.5%, Nikkei down a little bit as well. But, you know, basically everybody's just jockeying for position, waiting for those big numbers and those big events to come through. There's a survey out this morning saying Apple will take years to diversify away from China or decouple from China. China's COVID-19 lockdown still continues. It's temporarily reduced iPhone's 14 production. However, there is a feeling that people still want high-end iPhones, and why would Apple actually take away that kind of production there? So that's really weighing in the balance for them. Still, though, the biggest company by market cap in the world. US recap, stock futures inch very, very higher. I mean, basically, it's all about the midterms. The Dow lost a bit yesterday, but nobody's actually really sure about what's going to happen. Again, as I keep saying, it's all in the balance. The market had hoped the Republicans would make sweeping changes to the House of Representatives, and that would sort of create a gridlock in the United States. Senate races in Arizona, Georgia, and Nevada remain tightly contested, so the whole of Congress, as I keep saying, remains in the balance. Meta is laying off more than 11,000 employees. Their problem is they had lukewarm guidance basically last month for its upcoming fourth quarter. Investors therefore concerned about its rising costs and expenses. As you know, it's investing heavily in the metaverse, which generally refers to a yet-to-be development. That's the key, yet-to-be development. Do actually people want this or not? Hefty bets cost Meta $9.4 billion so far, and the company is now saying that it will anticipate losses growing significantly year over year. Elon Musk, continuing to hear a little bit about Twitter. We understand that General Motors and Volkswagen have paused their ad spending on Twitter since his arrival there. There's worries about advertisers and what they call brand safety. That's apparently what it's all about. But we've learned a little more about the future plans for the sort of app for everything that Musk actually wants to do. He's planning high yield money accounts, apparently debit cards and peer-to-peer transactions. So it looks like, and again, we don't know this definitely, but I'm moving towards thinking that it will become a sort of financial services business. And Tesla, the other thing that interests him, of course, almost 2-year low on Elon Musk's stock sales, and wondering whether the whole business about Twitter is a bit of a distraction away from electric cars. Now, Binance, we were talking about that yesterday. It's now backed out of the FTX rescue. It's backing out of those plans. FTX was valued at $32 billion earlier this year. It's now in a good chance it may well it may well collapse. There was a non-binding deal which Binance had, but they've actually had a look at some of the books and they're not happy about this. Cryptocurrencies have plummeted amid the deal turmoil. Bitcoin falling 14% yesterday after 13% drop the day before. For what it's worth, here's what the markets are saying about it. First of all, the Financial Conduct Authority in the UK said Binance was not capable of being effectively supervised, and it failed to respond to basic questions. The problem with this is that, don't take my word for it, the fact is that all these cryptocurrency operations, the dealing rooms, the exchanges and so on, are all interlinked. And what's bad for one tends to be bad for the other. It's certainly, all this is not pushing cryptocurrencies to becoming mainstream yet. Still a long time to go in that, of course. UK freezing income tax threshold. This is about the autumn budget, which is now just a week away. The freeze in those sort of income tax thresholds will raise 30 billion a year by 2026. That's the kind of feeling now that most of the increased income tax will be based on fiscal drag rather than raising basic rates. A group of economists has questioned, indeed, whether the black hole actually exists. I mean, again, we'll hear more detail about that in a week's time. The UK high street chain Next has bought Made.com for £3.4 million. This is how things happen in retail. When it floated, Made.com was floated for £775 million. It's been sold for £3.4 million to Next. Next quite like it because they've got it. Made.com has got a big or had a big online presence, and Next does that as well. So it fits in quite nicely. It's making sort of designer-led furniture that younger customers just starting to build their home lives together actually quite like. The fact of it is, because one of its founders is from lastminute.com, Brent Hoberman. It was very much based on a just-in-time service. That's how they kept prices down. But unfortunately, just-in-time depends on supply chains, and I don't need to tell you about how bad supply chains are. Made.com is also dependent on a lot of small businesses as well, and that's something which probably is going to hit some of the tax-generating smaller businesses in the UK. Lord Wolfson, who's the head of Next, has also said, he was a prominent advocate of Brexit. He said the UK's current immigration policy was crippling economic growth. He said firms should pay a tax to employ foreign workers and encourage them to recruit from the UK first of all. The UK and advertising, everybody waits for the John Lewis ad to see what that's actually like. They tend to conjure up sentimentality and spending lots of money. Not this time, less about buying things and more about kindness. That's the way that Christmas apparently is going this year because of all the concerns about cost of living and so on. Oil crude prices tumbling on concerns that China is losing its battle with COVID, and gold prices. I don't often mention gold, but we might as well do it now. They're suffering really ahead of today's inflation report. Obviously, gold priced in dollars. If the dollar gets strength from where people suspect interest rates are going to go based on the inflation figures, then gold will fall further. Selling pressure could target the $16.85 region at the moment. It's now about, it could consolidate round about the $1,700, but I'll leave you to have a look at the detail of that if that kind of thing interests you in the markets. As they stand this morning. That's the global view.
Real quickly, two questions. Number one is China. PMI's Purchasing Managers Index in China is falling so hard. This lack of requests for goods from China from America. I'd like to know your take on it. And secondly, Jeremy Hunt now wants to increase the tax brackets. The 150,000 tax bracket mark that pays about 45p percentage points in taxation of earnings. Now, Jeremy Hunt is trying as much as possible to shift that number backwards around 140,000, so a 10,000 less difference, so that he can get more people in the bracket and get them to pay more taxes. What's going to be the effect? And they say it's going to raise money, but a lot of people have started to complain in the UK.
I'm not anticipating that. I mean, again, it could be something that we'll see. It's still a week away. I think that the message that we're getting is that most of the tax that's going to be got in will be freezing the income tax bands, not reducing them or playing around with them, but just freezing them for the foreseeable future. And as I was saying, it looks, here's one calculation, it could raise £30 billion a year by 2026. But one very good question that you constantly ask me, Rafai, is does this figure include what's been spent on COVID and what's been spent on energy support? And from what I can make of the figures this morning, it does include that. So in other words, that's the kind of sum that they're looking at raising. larger proportion of tax raises than spending cuts. But again, I still suspect that what politicians are doing quite regularly is just seeing what actually flies in the far as public opinion is concerned. There's a lot of leaks coming out of this. I mean, if you take notice of what's in the leaks, you'll be able to do the budget for yourself. But I suspect there probably will be changes. I still feel somehow as though they're testing the temperature of this.
Well, quickly, you mentioned Nest. And, when you mentioned Nest, I thought of Lord Wolfson, who is the chief executive officer of Nest. He's been quoted in the report saying that although he's a Brexiteer, they didn't think that Brexit would turn Britain into Fortress Britain. And he's now recommending a market-based approach to addressing the labor shortages in the UK. And he is saying that, look, the government of the day should take a second look at its immigration rules and allow laborers to come into the UK, and that companies may just be made to pay a little tax extra for bringing foreign workers. What do you think about that? Second, we've been talking about the black hole, the fiscal hole that Hunt and Rishi Sunak are planning to fix between $34 billion to about 60 billion pounds, 60 billion pounds, pardon me. Now, the Progressive Economy Group, a group of economists, are saying that there is a miscalculation. That if government were to use a different accountancy rule, you may well discover that that hole that they say they want to plug does not really exist. What do you think about that? Then you made a point about crypto crash, how the Wild West, as the crypto space is otherwise known, seems to be crashing. And you talked about the interdependence of these crypto exchanges. How far can this go? Now that Binance is saying that based on revelations from the U.S. Securities and Exchange Commission and the due diligence that they had conducted, they cannot go ahead. And then, of course, Chairman Zhao, we don't know whether he's going to change his mind. These are the issues. Although we also have wanted to talk about the U.S. midterm elections, which seem to have not gone the way that Wall Street was thinking, because the margins are not as dramatic as expected. And President Biden, in 40 years, seems to have done much better than his predecessors in midterm elections.
Correct, he does. He does seem to have done a lot better, and he's rejoicing in that right now. I prefer to wait until all the results are in, because everything hangs in the balance right now. But instead of getting a beating like he should have done, like most people do midterm, he hasn't. And it does look as though Trump is a little bit further away from the Republican nomination. And, who knows what's going to happen. I think we should wait until we get everything in before we start making assumptions about that. As far as Lord Wolfson is concerned, I have a lot of time for him. I think he's done very well with Next and so on. It's weathered the storms. The idea of the idea of buying Made.com for such a low price, given its flotation price, which was over $700 million, is good for Next. It's a good match for them, and people are seeing that as something which will actually help Next's online presence. But as I say, Made.com may have to alter its business model, because it was founded on just-in-time buying, which is very difficult to do when, as we know, supply chains are proving rather difficult. The report that you're referring to is by something called the Progressive Economy Forum, and saying that the 50 billion black hole disappears entirely if debts are calculated differently. That may well be true. I do not know the answer to your question. I've never heard of them before. I don't know. I'd prefer to go with the IFS, which again appears, which is the Institute for Fiscal Studies, which is actually saying that those stealth taxes could be gaining, 60 billion pounds a year by 30 billion a year by 2026. I do feel that's the way to go. Again, I mean, who knows? The Progressive Economy Forum might be quite right. Then again, it might be wrong. And you're talking about between 50 and 60 billion, the black hole. What What's 10 billion between friends, Doctor? I don't know. I don't know the answer to these questions. It's the usual mishmash of flying flags up the flagpole and see who salutes it at the moment. All I can tell you is that I feel that the politicians are still not absolutely decided, and why should they? Just because they've had to send this stuff to the OBR. And finally, on cryptocurrencies, look, we all know about the volatility of cryptocurrencies. You know, if you want to get in there, that's absolutely fine. I don't think this business with Binance actually reinforces cryptocurrencies' addition to trusted assets, if you can call it that, by any stretch of the imagination. However, I do feel that cryptocurrencies will have their place in peer-to-peer payments and all the rest of it. But again, I don't want to think about the machinery, a bit like getting on the jet plane. I just want the thing to fly, but not yet.
All right, thanks so much, Michael.